Mohan, for both traders as well as investors, the markets are always a puzzle. So you have been an economist and a celebrated financial advisor. And you also have managed large AUMs of hedged portfolios, and therefore you are an expert in options trading as well. A rare combination of a financial advisor and an options expert. So what should be the psychology of a trader and an attitude of an investor in the stock market?
Thanks, Raghu. Wonderful to come back this week again and answering these questions. Yeah, it is indeed rare as a combination that somebody can talk about investments and also talk about option trading and hedging and derivatives. In fact, the whole reason why I looked into this and we do a lot of derivative trades is an investor with large money needs to protect his holdings in the market. So that is where our earnest desire is to make sure that the customer's money is protected, for which reason it prompted us to do a detailed research in the derivatives market. Basically, you are asking the question, what is the difference between an investor and a trader? There is a lot of confusion. People themselves don't know what they are. So first, let me give you the textbook definition of what an investor is and what a trader is. Investment is for wealth creation. So anybody who comes into invest money in the stock market, it is for minimum 3, 5 years, 10 years period, because you are investing in a business. You can't expect the business to do well in 3 months or 6 months. It takes years to build big businesses, and for businesses to grow, minimum period is 5 to 10 years. What exactly happens? The stock price moves from 300 rupees to 3000 rupees in 5 years. That is a wealth creation. Your 5 lakhs becoming 50 lakhs. That is where investors come in. And it is wealth creation for all the investors, whatever be the number of investors. So that is the textbook definition of investment, that it is a long-term investment. Investment means it is long-term, and especially in stock market. In other asset class it is different. So investor in stock market is basically there for wealth creation. Now what about trading? Who is a trader? Whoever just does buy and sell of stocks is not a trader. He is a speculator. A speculator is very different from trader. Speculator is a foolish person who just speculates, just like you take a bet, which side, in a cricket match you bet who will win. Nobody knows, but you just take a bet. That is speculation, but not a trader. Trader is a very serious person. Trader is one who has a clear-cut plan what he is trading, what is the expected profit, what is the expected losses. Never he looks at only the profit, and he knows how many trades he is going to do in a day. And if he does continuously over a period of time, out of how many trades, what is his possibility of wins and the losses. How many wins against how many losses. What is his risks that he is putting in the market. If somebody does all these things understanding, that is the risk management. So trading is all about risk management. Not only that, trading is also psychology. So you need to be sticking to your rules, that I will only do this many trades, and I have already done my back testing, and I know in the past if I have done the same thing, I would have got this much is the result. This much would be profit, this much would be the loss. So a trader is not a speculator. He comes with clear-cut plan as to what is he ready to lose against what is he ready to get. So he is a trader. Now I hope you got some idea of what is trading, what is investing. Now please evaluate yourself. Are you a trader? 99 out of 100 people who call them traders, they are not traders. They are speculators. And 99 out of 100 people who say I am an investor in the market, they are also speculators. It is just that they are hoping that something will happen, and the moment the market falls, they will withdraw the money. It could be 3 months or 6 months. They are not investors in the stock market. So please verify whether you are a trader or an investor in the stock market. This is very important. It's your hard-earned money. You don't play with your money. Know who you are, why you are coming into the market.
So Mohan, an investor also has to rebalance, right? So at some points in time, he has to make a decision on selling his stock. So would that be appropriate if an investor does that in say 6 months or a year? I mean, what is the time frame for rebalancing for an investor? Because if he does it too frequently, he runs the risk of being called a trader, isn't it?
See what happens, you run a portfolio of 10 stocks or 20 stocks, and all 20 if you change every month, then you are a trader. And out of 20, for your own rules that you have, for the reasons why you picked up the stock, if you are managing on your own, then you know the reason why you have holding that particular stock based on what parameters. You are expecting obviously those businesses to do well. And if you have a data which says that 3 out of these 20 businesses don't do well for obvious reasons, then you need to remove them and replace them with something better in the market. That is still an investing. That is not a trading. But you have a plan, you know why are you making these changes. Out of 20, it is always possible that 3, 5 do not do well. You need to keep making those changes. But that is not trading, Raghu, that is investing.
Oh, thank you, Mohan. So it's very clear that both trading as well as investing requires discipline and research. So if you can do it on your own, it is good, but it is best to take the advice of a financial advisor. Thank you for watching.